Hello students, in this video I will cover one short and two long questions of consignment topic. These questions were asked in Osmania University May and June 2024 question paper. These questions are quite important for the upcoming university examinations. Not only Osmania, for all the universities across India, same type of questions will be asked with regards to consignment. So you can easily prepare from this video. And you can watch other videos of mine in my YouTube channel, consignment related and other topics. Lots of topics are available. So let's start this question. Jyoti consigned 100 bicycles to Ravi costing 2,500 each. Jyoti paid rupees 1,000 for freight and rupees 500 for insurance. Ravi's expenses amounted to rupees 1,200. He sold 85 bicycles for rupees 3,500 each. Prepare consignment account. Quite simple. To prepare consignment account, the consignment account prepared in the books of consignor. If you see the consignment account, first, how much value of the goods supplied? 2,500 each, 100 bicycles. So what is the entry? Consignment account data to goods sent on consignment. In consignment we write to goods sent on consignment, 100 into 2,500, that is 2,50,000. Then consignor paid the expenditure towards freight and insurance, 1,000 plus 500, 1,500 to cash or bank expenses, 1,500 debited to consignment account. Ravi's expenses, Ravi is the consignee. So consignee's expenses comes to 1,200. So to Ravi account 1,200 since it is paid by the Ravi. The material has been sold 3,500 each, 85 bicycles. This material lies with whom? The consignee. In the sense he has sold the material. So we are writing in consignment account by Ravi's account. The entry is Ravi's account data to consignment. So how much value? 3,500 into 85 bicycles, that is 2,97,500. Once it is done, we have to calculate the value of closing stock. This is very important step in consignment. So valuation of closing stock. So value of stock left with the consignee, that is closing stock. Out of 100 he has sold 85, leftover of 15. So 2,500 into 15 bicycle, the cost of the bicycle left with consignee is 37,500. Then we have to add proportionate expenditure of whom? The consignor. All the expenses of consignor proportionately will be added while calculating the closing stock. Whereas consignee's expenses, only direct expenses will be considered, will be taken into account while calculating closing stock. Since we don't have information that Ravi's expenses, whether it is direct nature or indirect nature, therefore we don't consider. So therefore the value of closing stock plus proportionate expenses. How much expenditure incurred by the consignee? That is 1,500 into 15 by 100. For 100 bicycles he has incurred 1,500. So proportionately for 15 it will be 225 rupees. So total value of closing stock comes to 37,725. So that will be written by consignment stock, closing stock. Once you close, you will get the profit. 82,525 is the consignment profit. This is the simple and precise way of solving the problem. So we'll take up the long questions. First long question is, Arun consigned 100 radio sets costing 9,000 each to Mr. Balu of Vijayawada on 1/1/2009. Arun incurred. In the sense, Arun is the consignor and Balu is the consignee of Vijayawada. Arun incurred the following expenses on sending the consignment: carriage 6,500, freight 9,000 and insurance 3,250. Balu received delivery of 950 radio sets. In the sense, out of 1,000 he received only 950. In the sense, 50 have been damaged during the transportation. We'll see what information he has provided. Account sales subsequently revealed that 750 sets were sold for rupees 9 lakhs and the Balu's expenses were 3,000 for carriage and for customers he has given, but it is a customs duty 7,500. B is also entitled to a commission of 6% on sales. Arun could get only 35,000 from the insurance company for the loss of radio sets. In the sense, during the transportation 50 radio sets were lost. Prepare consignment account and Balu's account in the books of Arun. Arun in the sense consignor. In the books of consignor we have to prepare consignment account and consignee account. So that is what we are asked to prepare. So let's start the preparing those accounts. So question is also available here. Ledger account in the books of Arun, that is consignor. First one is consignment account, second one is consignee account. Then working notes towards valuation of closing stock, valuation of abnormal loss event. So quite simple, we will understand here how many radio sets sent by the Arun, that is consignor, 1000 radio sets, each 900. So in consignment account we write 2 goods sent on consignment, 1000 into 900, that is 9 lakhs. The expenditure incurred by the consignor amounted to rupees 6500 plus 9000 plus 3250. Collectively 18750, the total summation of expenditure incurred by the consignor. So we write to cash or bank. Then Balu received the consignment and incurred the expenditure towards custom duty 7500 and expenses, Balu's expenses he has given 3000, collectively 10500. So to Balu's account. In Balu's account, that is consignee, what we have written by consignment, that is expenditure 10500, even we have credited to Balu's account. The account sale subsequently revealed the 750 radio sets was sold for 9 lakhs. So we write in consignment account by Balu account sales 9 lakhs. In Balu account we write to consignment 9 lakhs. So this is the sales made by the consignee on behalf of the consignor. Balu entitled to get a commission of 6% on sale. So 9 lakhs into 6% will be 54,000. So we write in consignment account to Balu account commission 9 lakhs into 6%, that is 54,000. The same will be credited in Balu's account, that is 54,000. Once this is done, we have to come to calculation of value of closing stock. So closing stock valuation, how many radio sets were received by consignee? 950. Of those 950 he has sold how many? 750. The leftover are 200. Therefore 200 into 900 is the cost price of the radio sets. So 200 into 900 comes to 1,80,000. Then proportionate expenses of consignor. Consignor incurred total 18,750 for how many radio sets? For 1000 radio sets. So into 200 by 1000, 3,750 we have to take. Here we have to take denominator 1000 since we sent 1000 radio sets. Whereas while writing the consignee's proportionate expenditure, what we have done, 10,500 into 200 by 950 we have written. Why did we take 950? Because consignee has received only 950 radio sets. So that's the reason why 10,500 into 200 by 950, that is 2,211 rupees. So the total value of closing stock is 1,85,961. So the same will be written by consignment stock 1,85,961 in the consignment credit side. Then value of abnormal loss we have to calculate since we have to write in consignment account credit side. So cost, how many radio sets were damaged? 50 into 900, that is 45,000. Then proportionate expenses of whom? Consignor. So how much consignor? 18,750 has incurred into 50 were lost divided by 1000. So 938. We don't take consignee expenses here. So total abnormal loss comes to 45,938 rupees. So that will be credited to consignment account, that is 45,938. So once this is done, we will close the consignment account. We get the profit 1,48,648 rupees. Then we will close the consignee account. Then we will get how much amount is receivable from the consignee, that is balance carried down. Balancing figure 8,35,500 is receivable from the consignee by the consignor. So in this way we have to prepare the accounts of consignment account, consignee account and working notes even. So I hope I made you clear the how to calculate the value of abnormal loss. The question arises, the insurance received by the consignor will not be taken while preparing consignment or consignee account. That will be taken in ultimate P&L account of the consignor. So let's take up the next question. Banu Limited of Delhi consigned 100 cases of milk powder to Sonu of Bombay. The goods were charged at pro forma invoice value of 10,000 including a profit of 25% on invoice price. So the 10,000 what we have given itself is the invoice price, and what was the profit included? 25% on the invoice price. I will explain you while solving the problem how to segregate the cost price and profit element. The consignor paid 6,000 for freight and assurance, that is insurance charges. Consignee paid the import duty of 10,000, dock dues 200 and sent to the consignor a bank draft of rupees 4,000 as advance. Consignee sold 80 cases for rupees 10,500 and sent the balance due to the consignor after deducting a commission of 5% on gross sale proceeds. Show ledger account in the books of consignor. Now we will take up the answer. So first we will divide cost as well as profit element from the invoice price. So what he said, invoice price is 10,000 including a profit of 25% on invoice price. So 10,000 and we will deduct the profit 25% on invoice price, that is 10,000 into 25%, that is 2500. So what is the cost price leftover amount? 7500 is the cost price. Once we determine cost price, profit element included in invoice price. So ledger account in the books of consignor, first ledger account is consignment account, second is consignee account, and the third one is goods sent on consignment account, and the next working note is valuation of closing stock. So quite simple. Slight changes are there when we are applying invoice price method. What are the changes I will explain. I will put emphasis on that, but the remaining things are quite simple. First one is goods sent on consignment. Bear in mind we will write invoice price, not the cost price. Though we know the cost price 7500, we don't write. To goods sent on consignment 10,000, we will write in consignment account debit side. To cash or bank, expenses incurred by the consignor, that is 600 rupees. Then expenses incurred by the consignee, that is Sonu, 10,200, 10,000 plus 200. Then we write the sales credit side of the consignment account. By Sonu of Bombay, sales 10,500 he has sold. So to consignment account 10,500 in the consignee account will be written, as well as expenses will be written. Once we have written the consignor expenses and consignee expenses, we sold the material. Then commission. How much commission entitled to get Sonu? 5%. On 10,500 into 5%, that is 525 is the commission that will be credited to even consignee account. Valuation of closing stock. When you come to the closing stock calculation, so value of closing stock leftover is, out of 100 cases, the consignee sold 80. So leftover is 20. So 10,000 into 20 by 100, that is 2,000 is the value of closing stock. Proportionate expenses under that consignor, 600 into 20 by 100. 20 out of 100 into 20 by 100, that is 120. Then consignee's expenses 10,200 into 20 by 100, that is 2,040. The summation of closing stock comes to 4,160. This will be credited to consignment account 4,160. So in this way we have to prepare. The most significant is here the invoice price, that is consignment stock reserve, and goods sent on consignment, that is total stock reserve. These two things are very important. If you see on the debit side of the consignment account, we have written to consignment stock reserve. What is the profit element included? 2,500. This is for how many cases? 100 cases. What is the leftover cases? 20 cases. So 2,500 into 20 by 100, that is comes to 500 is the closing stock reserve, in the sense that 2,500 closing stock inclusive of 500 towards the profit element due to invoice price. That is very significant. Then by goods sent on consignment 2,500, that is total difference between the cost price and the invoice price, that is 2,500. This is the total stock reserve. This will be credited to consignment account. Same will be debited to goods sent on consignment account 2,500. So why we are writing these two things? To eliminate the impact of invoice price. Since it is prepared in the books of consignor, so we need to write at cost price only. Since we have already written 10,000 and we have valued closing stock on the basis of invoice price, therefore we will eliminate this impact by writing two entries, that is consignment stock reserve and goods sent on consignment, that is total stock reserve. So in this way we will do this, and the advance paid by the consignee, that is 4,000, will be credited to, that is bills receivable will be credited to consignee account, that is 4,000. Once we will close, we will get the profit or loss. In this case it is loss 4,665. Then we will get the amount payable to the consignee is 4,225 since we incurred the loss. Then goods sent on consignment account will be closed by transferring the 7,500, that is cost, to purchases or trading account. This is the precise way of solving the problem with regards to invoice price method. So I hope I have given you the clarity with regards to solving the problem. I wish you all the best. Thanks for watching the video. Do subscribe my channel Mentor, the trusted guide, and motivate me to make more qualitative and informative videos. Thank you very much.